Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 17th of September, 2021. Hope your week was a good one in the market. It was kind of mixed bag here, a little bit of selling here today that really dragged the market lower. So let's take a look. We're going to start out here with the daily chart on the left, and then on the right is a chart constructed with 30-minute candles. On here, I have a 65 period moving average. That's equal to 5 full days. On the left, we did close below the 50-day moving average. That's happened before this year, and we've recovered nicely. The direction of the 50-day moving average is still higher, but there is zero evidence here on the right that the buyers have regained any control. We have a pattern of lower highs and lower lows. Resistance was met this week on a couple of occasions at the volume weighted average price from the all-time high that we just registered earlier this month. So, the level below us, next level of interest is the volume weighted average price from the June low. That would bring us down to this trend line as well. That occurs at approximately 438 or so. So I think next week, if we see continued selling, maybe Monday we see selling and then Tuesday we see turnaround Tuesday near that 338 is certainly a level of interest. And the way we want to look at those is the same way we look at any volume weighted average price. We look for evidence that the buyers are in fact gaining control, and once we have that evidence, then we can position ourselves. We don't simply do the foolish thing, what I think is the foolish thing is just to blindly buy the dip. We want to wait for evidence. It's better to be late and right than it is to be early and wrong. As it's also said, it's better being on the sidelines in cash, wishing you were involved, wishing you were out, than it is to be in and wishing you were out. Anyways, the NASDAQ lost a little bit of ground here. It did hold up, better on a relative basis, but I wouldn't be surprised at all to see it come down and test the 50-day moving average, which is found also at the volume weighted average price anchored from that July low. So those two levels coming together at about 370. That's something to keep an eye on next week. I would also say draw a trend line that looks like this in case we get a flush underneath it. But here again, we also saw the volume weighted average price off the peak is where we saw the sellers, emerge after this morning. And again, I always look at it and say the direction of the 5-day moving average. We don't want to trust rally attempts until we've seen that 5-day moving average flatten out, and then it makes a higher high above that flat to rising 5-day moving average. So once again, the direction of the 5-day moving average had saved, purchases that didn't make sense. And the Russell 2000, now it's still in this much bigger range, of course, that it's been in for almost the entire year, as it's just frustrated a lot of people in this range bound market, seeming like it's going to break out at times, seeming like it's going to break down at other times. Instead, it just continues to be stuck in a range, and within that range, we're currently below a declining 5-day moving average, so there's no reason to be involved. Next week, if it can do something like this, maybe rally up to the top end of this level, the volume weighted average price off the peak, that is, and then the 5-day moving average starts to swing around and it makes a higher high, then perhaps you can buy as long as it's not extended. I mean, I wouldn't buy it if it went straight up like this Monday. I'd rather see it pull back, create a higher low that we could protect ourselves with a stop against. The semiconductors are still the strongest group out there. They are, yesterday they made a new all-time high. Today they saw a little bit of selling. They're still above the volume weighted average price from that August low. That's right here. They're also above this 20-day moving average right at this point. And of course, the rising 50-day moving average comes together with the volume weighted average price off the July low. That would bring this market down to about 263, 263 and a half if it does continue lower. And now we are below declining 5-day moving average. So I would say as long as the semiconductors are stuck below probably 272 and a half to 273, then I would just hold off on new purchases. And if you're holding longer term, you've got to figure out what your time frame is and where your stop goes. The Biotechs were higher here today. They rallied right up through that volume weighted average price off the peak. I certainly wouldn't suggest chasing. I think that next week, though, if they can do something like this, then perhaps the biotechs are a place to go. But you don't want to buy after that strength, especially since it came just in this last half hour of the day and the week today. Financials are still struggling with that rising 50-day moving average, and we see the volume weighted average price off of this low is right in that area as well. So it's struggling to find buyers in this area, and some people buy there thinking that it is support. It's trying to find support there, but we still have a declining 5-day moving average, and that's what keeps me from looking at this and saying it should be a buy. Notice also that the volume weighted average price off of the peak that it made at the beginning of late last month, rather, that's where the rallies got sold into on those gaps higher this week. So, be aware that, don't chase. It's better to be late and right than it is to be early and wrong. Let that volume weighted average price come back and maybe even offer support there. Some of the stocks that I had mentioned this week, well, Owl is one I'm still involved in from down here. I've got 1/3 of a position left with my stop right here right now. AGL was a beautiful short this week. AVGO, I had mentioned a couple times on Twitter. I own it at 505.5. Took a third off with a gain of $3.45, and my current stop is 449.50. If it gets stopped out at 449.50, then overall it'll be a very small loss because I did take that first third off. Same approach with AFRM that I got involved in this one at 112.80. Took a first third off with a gain of $2.70 per share, and now I've got two stops. One of them is really tight right here at 114.70, and then the balance is at 111.25, and I'm going to continue to raise that stop up underneath higher lows if the market gives me that opportunity. In that same vein, I'd put CGNX on Twitter this week as well. I purchased it at 89.60, took a third off this morning at $91 per share, and then I raised my stop on the balance to $89.30. So I got stopped out of this thing. On the second third, I lost 30 cents on 2/3 position, whereas the first third I made $1.40. So net, I made about 30 cents a share. I'm not interested in making 30 cents a share in CGNX, but what I'm not interested in is losing $1, $2, $3, $4, or whatever. I can always revisit this stock if it sets up again. When I put this on Twitter, people were saying, well, what's your price target? My price target is always the same for longs. If the stock is in an uptrend, I expect it's going to make higher highs and higher lows, and until that pattern interrupts with a lower low, then I get stopped out. I wish this thing went to 100. I wish it went to 150. The market doesn't care what I want. I also got involved in Home Depot this week at where's my list? 335. Took the first third off with a gain of $2.30. Not because I want to just make $2.30, because I want to take some risk off. And my stop on the balance right now at $334. So if I get stopped out on this, it's basically a break even, but it's not losing money, and that's the key. Let's talk about Bitcoin for a moment. This thing has been just amazing with some of these volume-weighted average price levels. As we've previously noted, the orange is the year-to-date volume-weighted average price. The red one here is off of the all-time high. And, the latest pullback came down right to that level, as well as the volume-weighted average price off of the July 20th low. That July 20th low found buyers once, found them again, and now where we're finding buyers, if you look to the right here, this is a 4-hour chart. Each one of these candles is 4 hours. Well, I anchored a volume-weighted average price off of this low, and it's come down to that today, and the volume weighted average price off of this peak on the daily time frame. So we're in this little area where if it can hold above 46,500, I think it's getting ready for another push higher. If it breaks below 46,500 or so, I think you're probably going to see another test of the year-to-date volume-weighted average price, or at least the VWAP from this prior low. So I'd be looking for it to drop down to, basically 43 to 44,000, which might not seem like much of a pullback. It depends on what your time frame is, but if it can get back above this little peak from this pullback, I think you're going to see that Bitcoin can quickly head back up towards these highs, near the 52.5 level. I'm out all next week, so hope you have a good one, and follow me on Twitter at Alpha Trends. And if you're watching this on YouTube, as they say, please like it and subscribe. Have a good weekend.